All right, let's jump into it. So what are we at? 10:37. So again, that sort of pre-Asia, sort of waiting for volume to come back in and sort of push the next sort of move that we saw overnight. So mainly there was just, play of the day was just that CPI data dropping and US dollar just getting absolutely hammered. So I'll start off with the Aussie because obviously this is the main sort of trade that I've been sort of playing along with the long side. Look, it's back right up at this breakout point here, which, you know what I mean? I think this is for me what I'm sort of calling confirmation that we've seen the base in Aussie. So if you sort of go and have a look at my sort of video over the weekend, I picked up on this, which I thought was quite interesting. So we can see on the daily breakout, this move that came up through here. Of course, we know this is the big sort of falling resistance which makes that sort of tip of the wedge, tip of the triangle, however people were trying to trade. I was trading obviously this negative divergence down into a wedge down here. So if you look at this first break move here, this is what I found quite interesting, and I highlighted this over the weekend. If you look at this just as an individual pump up move from the lows here, we got the breakout past the sort of falling resistance. It'd never been able to do this previously. So as you can see, strong, heavy rejections every time. We got the close on the outside of this. The next day, this is on a daily chart here. The next day, bang, smacked straight back down on the nose. And it came down to the 61. Bounced off it a little bit, but 61% retracement of this move. It looks like a sort of failed breakout. Of course, the next couple of days we saw what happened and sort of flew up. This was mainly sort of in anticipation for the RBA, but also came in line with, I think this is around the NFP as well, that really got a sort of closing bang right up the top up here and really testing those sort of the top of all these wicks. So it came up the top here. Of course, then followed up by RBA coming out, raising, market going, yep, we knew that anyway, and bang, smashed it back down. But the point that I want to sort of highlight with this is that if, and this is what I sort of said on the weekend, that if we look at the sort of move that sort of came on a weekly chart, we can also see that if we drag this one up here and put this up at the top here, this has also come back down to the 68. We've also got the sort of, like that little big sort of falling resistance has obviously disappeared here, but, comes in sort of around this sort of zone. I think it's about there. This also on a weekly had the breakout and then bang, smack back down on the nose to the 68. And this is what I was saying, that this was the hope for Aussie, or the last hope I should have said for Aussie, that it could repeat the daily price action on the weekly time frame, which obviously we're seeing it has now, off the back of that CPI, and it just rocketed up last night. So the repeat of the price action there is really very interesting to me. So we're pushing right up the top here. If you go back onto the daily for 1 second, look at the reaction after the fact that it actually went through and closed above that breakout candle. It just absolutely took off to the top side. So there is a very high chance that if we get a push up above this 63, I've got a fairly modest price target here, which we know is a fairly strong previous support area, sort of like that's been played out through the whole year, basically. We can see support, 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 resistance. This is what I've been targeting for the last couple of months to try and sort of get the break. And obviously we've seen attempt come down to this little wedge, bang, bang, breakout. This little breakout, clear this up a little bit so the chart isn't too messy. But again, this is how you trade these things with the falling resistances. Like, it's nice to think that they'll just break out and go, and you're just like, yep, cool, that's it for me. But generally, what you see is you see the breakout, and if you look at this on the smaller time frame here, and I'll zoom this one in, and we can move to the bigger one. But again, with that sort of 61% retracement, but you're getting breakout. Here's your breakout point around this zone here. Breakout comes back, retests, generally comes a bit lower than the breakout point. It snaps out the people that get into the position straight on the technical break. Generally, you don't get break and run. You'll get them break, come back, people will get more positions. You got to sort of get rid of the last of those little sellers, and then you sort of go bang, and that's the move that you want to sort of capture. And we're seeing this again on this higher time frame, of course, but the same sort of thing's happening. So if we go over here, we've got a big major breakout, comes back, tests that breakout point, and then bang, back off here again. So now we're at the point where we're retesting the highs. We know the sellers have been here previously, obviously very recently as well, as much as sort of 8 or 9 days ago, or not even, whatever it was, 6 days ago. So if we can see a depletion of these sellers by way of price moving past this level, then I think certainly we can be looking at these other areas over here. 6,600 is, or yeah, 66 cents, whatever you call the 66 handle, is going to be a very tough one to crack. So if we can go through that, all the better for it, because I'm sort of long Aussie. But yeah, certainly I think this is why I'll be sort of having my price target around this zone here. Not to say that I won't keep runners, because you want to see this thing and sort of hopefully see it progress, because obviously we've got higher price targets if this wedge does actually come to fruition. Which at the moment, this is how you want a sort of change of trend to start. And we can start to sort of draw up some sort of like potential. And this is what I was saying over the weekend as well. You can start to sort of draw up a couple of these channels and sort of start to sort of think, okay, if we do get breaks above here, where are they going to go? I mean, you don't have enough connections really to sort of make a topside channel here yet. I mean, obviously, the most obvious one is that previous high there, but this is a really standalone point. So this is really just a bit of a sort of a theory kind of thing at the moment. But it would sort of line up with the price targets of the horizontals there as well. So, we've got to sort of wait and see, but, it could come further out this side here. I would say most likely a touch up of this line, because obviously this was a high, so people will be sort of looking for that to be touched again for the next connection basically for a channel. As to it sort of coming back down into 64s, at the moment I would say probably not. I think a lot of the market have decided to sort of get out of their US dollar positions. We're seeing that across the board with all the USD crosses. Aussie's not going to be an exception. And also, if anything, Aussie's been bashed down a lot harder than everything else. It's really been lagging. It's got a lot to sort of catch up on in terms of, the whole sort of risk sentiment. Aussie is a risk asset and it likes to run when everybody's pumped up and, sort of the markets are moving and everyone's got that risk on attitude. It hasn't done that. It hasn't actually done that a lot of the year because, as I highlighted in one of the other videos, this is where DXY broke down to its sub 100 level. But previously here, DXY was at, I can't recall off the top of my head, we can have a quick look actually. Where was it? So this is the first one here. So DXY was at 102, then moved to 99.6. Aussie didn't, like, I know Aussie's not part of the DXY, but you should sort of think about it in the sense of a broad sense of sort of US dollar strength across the board. You would think in theory you would get Aussie moving to the next level as well. So this is where DXY was at 102, came back here, and then DXY at 99. You should have had at least a bit more of a progression, like, because obviously one move was further on the US dollar. This should have been further on the Aussie, but it didn't. It lagged. And that's why when US dollar ran, it got exceptionally hardly bashed. Anyway, so that was there. This is now. If we can get above this little zone, as you can see, we've got that next little zone marked out here. This is going to be 6,600. If we can get above that, well, it's certainly sort of game on, and we're going to be looking for sort of buy the pullbacks to sort of add to positions and sort of get in and out with them. But certainly for now, Aussie on the front foot. We do have data coming out this morning as well for the Aussie. So just bear with me 1 second where we are. So we got the wage price index. So we're looking for an increase here. So previously 0.8%. It's expected at 1.3%. So I don't know how much of that is necessarily priced in. Obviously, as I say a couple of times, that we can have good data, bad data. If what's happening with US dollar is the main thing, well, we'll just sort of basically toe the line with that. But certainly, if we have the double-pronged approach in that we have US dollar selling off, plus we have strong Aussie data, that's going to be what's going to get us our breakout to the top side here. So yeah, it's certainly sort of poised and ready to go. If we do get weak data, it could sort of momentarily sort of push us back. But again, I think that would just sort of be a matter of sort of getting down onto some shorter level, sort of lower levels, picking out some entries and buying some dips to sort of come back to the other side there. Lastly, just on the daily, this is another thing that we highlighted. Actually, sort of got a tip lower just on this last push down here on the RSI. But I noticed that, even going back to start of September, the RSI has not been, or the stock hasn't been able to really sort of push underneath this sort of 40-45 zone, which is quite interesting. And it sort of shows that sort of like, people are sort of certainly happy to buy, even as it's sort of like prices moving down. We're not really getting these massive oversold conditions and that, and they're happy to sort of push the pressure up and sort of obviously absorb everything from down the bottom. And this is another reason I think a lot of people are loaded up from down here that have been waiting, like myself included, for this sort of move to the top side. So if we could sort of push past this level here, I think the 65.20, I think that's going to open it up to 65.80 to 66 in the short term. Short term with that. Obviously, a couple of other bits and pieces. I'll flip onto sort of copper and the Yuan and that in a moment as well. But we're seeing some breakouts on the Yuan. That's just popped its sort of yearly trend, and copper actually poked its nose through its yearly falling resistance. It has been sort of snubbed back a little bit, but certainly it's in that sort of attack zone. So those two things, if they progress as well, that's also going to help the Aussie sort of push a little bit higher. So cross through DXY, which is the main one, we can see first price target's been hit here. So this is the area that we marked out. We've seen it being previous resistance. We saw it as a small little resistance on the way back up when it first came out of this big sort of falling channel. It's sort of popped through, and obviously, look, we haven't been back at these levels since September as well. So it's really come down hard here. We've almost seen the completion of this bear flag move that we sort of isolated the other day, and also the bottom of what could be a bit of a channel here. Though, again, these sort of things, it's coming down quite hard. You want to see, if you're going to see these turnarounds, generally you want to see the candles tighten up a little bit. If you look at these large drops downs here, and it's a small, 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 and then we get a turnaround. These ones here, small, 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 and we get a turnaround. You do get these ones, well, these are, again, sort of small, 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 and then sort of took off. You do get these kind of moves here, but as I said, as these were happening, I believed that these moves here, sort of through, actually, sort of not through here, this one through here, and also this one through here. I believed and sort of called those all as sort of short squeezes as they were happening, because we broke this channel. You need to respect that. It looked like it was coming down, broke lower lows, technical sort of thing. Here we go, bang, snap it back up. Time and time again, and obviously, we've sort of come into this last bit where it finally got smashed down on NFP, set up this little bear flag, and bang. So it's really come down and sort of played out very strong. And I think, what I mean, you got to sort of look at it in the context of things. That's the move that we've looked at for the last 3 months. This is really only at the 38% here. So we take the lows and we drag it right up to the highs there. Make this one a bit easier to see. This one on the white. There we go. You can see, look, it's price target, and this was another reason that I had that price target at this level, was the fact that that's only the 38%. And obviously, in the scheme of things, that's still sort of got a fair bit on the table. And as I've said a couple of times as well, DXY loves deep pullbacks. It does. It's not afraid of having a deep pullback just to reload to go further. So, I mean, realistically, this is why the next price target's down at the 61. We could see, it won't go sort of boom down like this, but, this kind of thing down here. And then we could see another shoot off. And there's nothing to sort of say that, through this period, this can't happen. And the Fed can sort of, anything can happen over this, because obviously this is a couple of months sort of play out. But, the Fed can change their position on it all. You could get CPI creeping back up. There's a number of things that could happen, but certainly, I think this second price target at 102 is definitely achievable. I mean, if you zoom right out and we sort of go, okay, where is it really at? And this is on the weekly. What we are seeing here now with this sort of latest sell down is something that we can drag through like this. And we can really sort of call this one, the main trend for it all, because since we've had such a heavy sort of breakdown now, that is a lower high. And if we've got a lower high, well, you got to sort of start to think, okay, well, how low can it go? I mean, could it re-attack these lows down here, this sub 100? And could we have something like this happening? I mean, this is also another possibility. This is a sort of obviously, short-term bearish, but potentially bullish scenario. But again, you got to sort of think that these things, like you got to sort of plan for all things possible. What if it does sort of come down here and goes bang down to the 168 of this whole main move up here before? That sort of lines up pretty well to sort of come in with what could be bottom side of a larger channel. Then you get a sort of a bit of an explosion off. But this brings it down to 94. I mean, what happens to the other currencies, the other crosses? I mean, potentially you're looking at Aussie sort of well back over probably 70 by that stage. Euro, maybe sort of revisiting probably back up to 120 plus at these stages as well. So that's certainly a possibility. The fact that like it has rejected off this top here, even though it broke through here, you got to think as well, like why did it just run unrelentlessly from this here? And most likely, I feel the reason is you had such a strong support through here. Such a strong support. It dropped down. So much of the market would have gone, look at this. We've got this high, massive high from back in 22. Sold down, sold down, sold down. This is looking like a bit of a sort of, if you get rid of this part here and you just look at this falling resistance here with its support across here, descending triangle, breaks out the bottom side. So much of the market got short. And this goes along with that sort of cute saying of like, the market can stay irrational longer than you can stay liquid or whatever it is. But this is the point, that it just did not give up. And, I saw a good quote, or heard a good quote actually a while ago, but sort of like, what were the three sort of characteristics of a bear rally? And it was like short, sharp, and unrelenting, or something along these lines. Point being is that this fits very much into that category. The reason it sort of has just gone and sort of not given up at all could be potentially just because this is like, obviously, you've got the sort of the fundamental factors of it all, but so much of the market would have got short here. They just didn't give them a chance. They push them up. They would have had stops above here. They would have had stops above here. Maybe the next level would have been up the top over here. But they would have just squeezed out so many dollar shorts through this period here, and it just did not give up. If you get down onto the lower time frames and you look at those areas that I just sort of isolated before, and the price action's exactly the same. It doesn't matter sort of what time frame it's on, but we'll put it on the 1 hour just to sort of give it a better view here. This is where your supports were. At first, here's your low, came down, unrelenting, moved to the top side. Okay, fine, let's put the supports here because that's the low. Bang, trapped in the market, unrelenting, move to the top side. Like, this is how short squeezes work. So in theory, there's no reason why we can't be sort of calling this exactly the same thing. So yeah, could have done this a better way actually. There's no reason why this, so should be a little bit better with the charts there, why this can't be the same thing but just on a higher scale. And we've just sort of seen a relenting sort of squeeze here. And if you look at if you go back onto the chart that I had a second ago, you saw what the reaction was afterwards. It came back down because this is just squeezing the market. They've taken everything they can out of it. So what do? They then run it back down to the next position. So, as I said, I've got my sort of next price target that's 102, which is on the 61%, which we can see has been an area previously. But I'm not sort of completely sold on the fact that we aren't going to see US dollar even lower, sort of in the coming sort of months, coming through to, I mean, this could potentially sort of be moving through to sort of like February, March, first quarter of next year. But, I think there's probably still a lot more sort of downside to come, particularly the strength and the speed that this has come down. If we get back onto the daily, this is how they'll work. You've got your debt, you've got your move, it's found support, it's found resistance, it's come down and tested that level, bang, it's broken through. This will find support, whether it's here or whether it's down here, somewhere along here, it'll find support, it'll sort of go along, it'll move back up. Maybe if it's strong enough for a rally, I don't think the rallies are going to get that high, actually, to tell you the truth at the moment. But, in theory, retest the underside of that there, find resistance, come back down, test those lows. And this is how the pattern goes, and it goes on and on and on and on and on. You test the lows, you've either got a double bottom or you've got a lower low, and then the same pattern happens again and again and again till it doesn't. So yeah, it's certainly, I think there's probably a little bit more downside to come. You could see some little rallies because if we look at the sort of 4 hour, we are sort of somewhat sort of shoring up a little bit of a channel. You can see that it's trying to halt it down here. We're at the 38, so there's another reason for the market to say, okay, let's reduce a little bit of our exposure and sort of take some profits off the table for those sort of first positions. But, as I said, I think they'll be fairly short-lived, and I think we'll just sort of move up, get a bit of resistance, and then shoot back down. So, again, same sort of price action, down, support, resistance, re-attack the lows, and then on we go, sort of moving down. Cool. All right, so moving across, we'll just have a look at how it sort of relates on a couple of other things as well. So this is the big one that we've been looking for, this big sort of rising support on the Yuan. So this has been what I've dubbed the Great China Grind. It has been 3 months within a 1% range. It's finally broken, and you can see broken and closed to the downside. This is a rising support that, it hasn't been sort of touched since May. We got a little bit of a bounce off it a week ago. But you can see this goes along with how sort of like marked out these things. Sell down, back up here. It found resistance. Look at that on cue within a couple of pips. Comes back down, retests that level, bang, breaks through. So, you got to sort of think, look, the market's selling US dollar broadly. The Yuan's strengthening, that's going to help with the Aussie as well. You're going to start to see a lot of these things because not just one thing breaks at a time. We'll generally see a few things break. And I'm sort of looking at potentially at something along these lines here. So we've got the first price target, which is what I've pretty much called the sort of measured move of this sort of range that it's been in for the last 3 months. I expect a bounce here. This is probably the main sort of short-term target. Again, this is only back at the 38% of its main run. I wouldn't be surprised to get a bit of a rally through here. And then again, sort of bang, retest that sort of previous low. If you go down there, well, I think, as I said, I've got it marked out here. I think that'll be sub 100 for DXY if we get the Yuan sort of strengthening to this level down here. Look, it's not going to happen straight away, but these are the things I'm sort of planning for. And then you got to sort of think, if we could get this sort of, head and shoulders playing out, where does it take us? Sort of think, these are all sort of just, thinking a little bit further ahead. But that absolutely hammers DXY. Hammers DXY. Hammers the US dollar. And that's your measured move price target down here. So, certainly if we see US dollar continue to sell off and this head and shoulders does play out, this is really taking us back down to, prices that it was at in May, past the 61%. But it could coincide, depending on how long the US dollar is being sold off for, depends what the Fed really do. Like sort of obviously they were waiting for the data. Now they've got the data. If the whole market's going a little bit more risk on, you might sort of see some stronger data out of sort of China as well. So yeah, it's certainly interesting sort of times, and these are some big breaks. And this is what I say: you won't generally see one thing break. You know, everything will kind of pop at the same time. Gold quickly, it got a bit of a pump. It didn't sort of hold. It didn't get like it wasn't the big benefactor of all that stuff. But let's chuck it on this one's a bit cleaner. Yeah, look, we did get, as I said, this sort of little backfall through here, little sort of little stop out move, and then sort of exploded back up here. So we've come, look, we've stopped at a fairly technical level here. You know, these previous highs is 1970, which we sort of marked out. So, you know, I think certainly it's just, it's thinking about it now. So, you know, what we could sort of be seeing with gold at the moment could be, as I said, this is how gold will work. It'll sort of consolidate, then before it moves, it'll shoot and fake down. You can see this on a better on a sort of a 1 hour here. Consolidating through this zone, closes to the outside, traps in part of the market, and explodes off to the other side. And then you look, what has it done here? Exactly the same thing. Consolidates, pushes down. This is obviously news driven, this little wick here. Fakes out or stops out people that have got their technical stops. And this is why I say with gold, you need to have a little bit, you need to be a little bit more liberal with your stops and have them a little bit wider, because it likes to just do this and go bang, bang, take you out, and then it'll rip. But the point being is it'll consolidate and then it'll go down, it'll fire back up. If you look back, actually, where was it? It was last time we were down at this zone here. This is just another example of it here. Consolidate, drop down, explodes back up to the top side. This move going back, this was just March this year. I thought it was longer than that, so about 8 months or so ago. This is the move where we were sort of like really sort of like trying to come off this double bottom here, but it sort of came down. It looks better on, I think, a weekly or monthly shows the picture a bit better. Actually, it must be the weekly. There we go, that's a bit better. But basically, it does these moves like, and this is what you want to sort of see with gold, to sort of see, look at the sort of reaction afterwards. You want to see this last move down, to shoot down and then recover, and then bang, explode out the top side. Now, this obviously hasn't done it in the same amount of candles, but same thing is, the principle's still the same. You've got the move up, you've got the sharp down, and then turns up and flips. If we get this first move up here, sharp down, and it comes up and then flips. Probably see this better on maybe on a monthly here. If this candle flips here, this is exactly the same thing. It's come up. It didn't sort of obviously come right down to these lows here, but if we can sort of come back up here, where are we at? It's only halfway through the month. Flipping the candle, the monthly candle comes at 86. Where did we get for the monthly highs? Monthly high is 2004, which we obviously didn't get that monthly close about above 2000. If we can get basically, if we can take out 86, if you can take out 2004, I think we're going to see a big momentum shift and move to the top side with gold. Of course, you know, the landscape's changed a little bit because obviously the whole Middle East situation isn't quite there the same as it was for the driver. We had the sort of banking or small banking crises or so earlier in the year that sort of got it up to those sort of 2060s, 70s, 80s kind of thing. So it might need something on a fundamental level to get it to flip, but you know, again, US dollar selling off. If it continues to sell off, that money's got to go somewhere. Like the money doesn't evaporate. It's got to go into something else. And as it goes into something else, we're going to see, you know, gold is a generally a really good inverse relationship with US dollar. So that could be the driving force that gets the push out the top here. But certainly above 86, we're going to have that monthly flip. People are going to be watching that. And then, you know, certainly a monthly close above 2000, but a flip in this month above 2000 and, where we got 2004 or something, I think we said. Take out previous month's candle at 2010. I would not want to be short on gold there. I would say certainly we're going up here, minimum to sort of be filling this wick, most likely breaking to all-time highs. So that's definitely something to sort of watch out and keep in mind for gold. And finally, so just put it back over here, have a quick look at copper. As I've said, this is the falling resistance daily. It's been respected since March. We had a little bit of a push out here. It's obviously, I mean, this is what we this is why we plan things out. And we say, look, potentially this is what we think is going to happen. And we did. We got that little push up to it. Obviously, sort of stuck its nose out a little bit here. But, they still are happy to sell it back down a little bit. Now, you just want to sort of make sure that this sort of stays above these previous lows, and then, take out the highs here. And I think we could see a bit of a follow on here. And again, these kind of things are going to be helping Aussie dollar as it sort of moves forward. So certainly it's on the sort of front foot at the moment. This looks like it was just basically a little sort of fake out. Top side of it, I think sort of 380 is going to be a pretty tough level, or a good sort of confirmation level anyway, to sort of get above. If it does decide to respect this bottom side of that previous triangle, that could also, I'm not a big fan of this one anymore. I think it's chopped around it too much. It tried to reject the underside, but obviously if it was really respecting it, would have rejected the underside here and would have been a complete meltdown. But obviously they're happy to sort of fly back up here a little bit. So I'm happy to sort of trade above this sort of falling resistance, and then again look for these sort of ranges in the sort of horizontal zones. All right, a bit longer this morning, but that's it from me.